want to start by thanking you for inviting me, Jerry House. I'm a director at the LA County Assessor's office, along with others from the assessors to potentially answer. Hopefully we can answer any questions you might have, and I'm going to share some information that I think you'll find is relevant. So I want to talk a little bit about some of the programs that are out there. First, how to get your property reassessed to reflect the damaged value of the property, and then talk a little bit about what happens after that in terms of rebuilding, or what happens after that. What does that look like? So let me start by saying that there are two programs available to have your property reassessed. And one is an ongoing program that's there every year. It's called Decline in Value under Proposition 8. And that's for homeowners whose properties weren't physically damaged, but whose market value has dropped significantly due to the disaster. There is a decline in value program, and this program allows for temporary reductions in assessed value when the current market value of the property falls below its assessed value as of January 1st. So here we're just appraising your value. If your market value falls below your trended base value, then you will get reduction. Unfortunately, for the misfortune and calamity, the date that we set your value is always on January 1st. So the event took place on the 8th. So we would have to value it for what the property was like on its condition on the 1st. So the first time to file for this, the filing period is July 2nd through the end of the year, and it would be July 2nd of 2026 if you want to have the property's damage reflected in the appraisal. The other program is called Misfortune and Calamity, and this program provides relief to homeowners who qualify. And to qualify, you have to have damage greater than $10,000, and you have to file an application within 12 months of the damage. Okay, so those are the programs to provide relief on value. So there's also, once that happens, it's going to take some time for people to rebuild, obviously. But at some point, there's going to be a decision that needs to be made whether or not to rebuild the property or to perhaps acquire a replacement property and potentially transfer your old trending base value to the replacement property. So I'm going to talk about both of these. First, I'm going to talk about if the decision is to rebuild, there are two provisions that talk about this. One, and given this, these fires, they qualify for both misfortune and calamity relief under the law. The first one is known as Section 70.5. This is misfortune and calamity relief for properties that were substantially damaged in an area that the governor has declared in a state of emergency, which is what we have here. Substantially damaged means that your property, the value, the market value of your property the day before the fire has lost 50% or more of its value. That qualifies you as being substantially damaged for the relief under this program. Under this program, you have 5 years to rebuild the property. And if the value of your replacement property, whether or not you purchase it or do new construction and construct it, if the value of the replacement property is within 120% of the market value of the original property appraised the day before the damage, then your trended base value will be restored to the new property. You can just merely transfer your trended base value to the new replacement property. So if you had, for example, you've had your property for quite some time and your market value is $500,000, and when you rebuild the property is worth within 120% of that, then your trending base value will be applied to the replacement property. The full cash value, the 120% test, is not, this has been confusing, so I want to explain this to people. The 120% test is a test of value. As long as the comparability is similar in function, utility, and size, then that's considered comparable. But how they determine it is based if the property is within 120% of the full cash value. So if, for example, your original property was 1,500 square feet, and you build something that's 2,100 square feet, if when appraised, that value, the replacement, is still within 120% of the value of the original, despite the differences in square footage, it's considered similar. So that 120 test kind of captures differences for quality or differences in materials used and also size. The real test is if what you built is within 120% of the value of the original property before the damage, then your base value will be transferred. Now, if you exceed 120% of the value, only the increment above the 120% will be added as new construction or added as new to your taxable base under that program. So there's another one, which I think is going to be even more important because the first one has a time limit of 5 years. Now, there is proposed legislation to extend that out to 8 years. And there's other legislation we're working on, but currently that is the law, it's 5 years. There's another relief under Section 70, which is just known as misfortune and calamity. It does not need to be in an area where the governor has declared a disaster. It's available at any time in any county. You just need to have damage that exceeds $10,000 to qualify. So these properties that are total losses or significantly damaged would obviously qualify. They'd have more than $10,000 damage. The difference here is this one says there is no time limit on, you don't have to build within 5 years or 8 years if we get the new legislation. It merely says that when you do rebuild, if what you built is essentially the same thing as what you had before, then your trended base value will be restored to that property. And the test in the law says substantially equivalent, which just means similar. And it has to be similar in function, utility, and size. And what does that mean? Function means that if you had a residential property that was zoned residential, you can't buy a property that is commercially zoned. It has to be similar in the government restrictions, so zoning. It has to, if you had a single family residence that was a 3-bedroom, 2-bath, 1,700 square feet, if what you build is a single family residence that is 3 bedrooms, 2 baths, 1,700 square feet, then it is substantially equivalent. So that's the test there. And there is, again, with this one, there is no time limit on the construction. Now, if you go over the substantial equivalent, if you make it a 4-bedroom, 2-bath, 2,100 square feet under this program, they would merely pick up the extra 400 square feet as new construction added onto your prior old base value. And both of these programs, again, you have protection up to the comparability standard, and only the increment above would be added on to your prior base year value. You do not have to build, some people have asked, do you have to build the identical footprint? No, you do not. So if you had a 2,000 square foot 2-story home, you could build a 2,000 square foot 1-story home. That's okay. It does not have to be identical footprint. Okay, any questions on rebuilding?
If anyone has any questions, or if they can use the raise their hand feature.
Or I could go on. I did want to talk about one other thing about transferring the base year values.
That's fine. I just want to make sure if anyone has any questions, please use the raise your hand feature, and our chair Mahogany Rose will recognize you. All right, looks like for simplicity's sake, Greg, go ahead and mute yourself quickly and ask a question.
Real quickly, I'm not clear on why when you reevaluate the property for tax basis and you shouldn't have to wait a year, because in the assessor's tax information, you divide the value already by land and improvement. And if the improvement is totally gone, the tax should be only on the land that you have on the property as of the tax bill. And I'm not sure why you're not following that, because the information you just gave us doesn't follow that.
So there's one thing, that's how you value it to calculate the amount of the reduction. And then there's another thing about returning the value on rebuild. So as far as calculating the reduction, for the assessor's office, we do allocations, but the assessor office typically deals with total value. And we usually appraise that unit total value and have an administrative allocation within improvements and market value. However, when we're in the misfortune and calamity, we are to calculate those values separately as at their full cash value or exchange, the market values.
That's my point, though. There shouldn't have to be an appraisal. We already have a listed value based on the assessor's tax information. So if the property's totally burned down, the only thing that you have should be taxed on is the appraised value or the assessed value that you gave for the land.
So we are looking at the data. We took the amount, how we're going to value it. We are going, for properties that are a total loss, we're going to take the improvement value down to 0. We're going to be reducing the land value significantly, but we're still gathering data to see the impact on the land. So we will be doing that based on the information that we're gathering from CAL FIRE and other sources. So yes, we will be taking the improvements down to 0 on their assessments. Absolutely.
Fantastic. And thank you very much, Greg, for that question. There's a question in the chat from Irma, and and this is just I think she's trying to get some clarification. If the property was purchased in 1970 and the assessed value was $500,000 on January 1st, 2025, the assessed value was $800,000, and you build 120% or less, does your assessed value go back to the $800,000 versus the market value today, which may be $2.5 million?
Okay, I'm confused because I think I understood the question to be that you had a trending base value and it got up to 500,000 as of 1/1/25. Is that right?
I asked the question. I apologize. I'm a little bit sick today.
Oh, okay.
And this is from a couple of my clients. So they've owned the homes for 1960s, 1970s, and so over the years it's 2% increase, correct?
Right.
So now their assessed value is, let's just say, I'm just using random numbers, 800,000. Are you saying that if they rebuild, and even though the market value after it's built is, let's say, 2.5, you will go back to the original assessed value as of January 1st, 2025 of 800,000.
800,000 would be placed on that home despite its market value being $2 million.
Got it. Thank you. That's what I wanted to clarification.
Because there's a difference between assessed value and market value. So,
correct.
Right. What the assessor, when somebody purchases a home, 99% of the time we're going to accept the purchase price as setting the base, the tax base, the taxable base value, as long as it was an open market transaction, a brother didn't sell it to a brother way below market, open market brokers involved, we're going to assume and accept that price most likely as the base value for the property. After that, each year it trends, and we call that the trending base value, perfectly expressed in your example, where somebody's had it a while and it's just been trending up by maximum 2%. But over time, that value will probably go far below the current market value. So what we're talking about restoring is the trending base values, the Prop 13, as long as you build something comparable.
I want to recognize Blake, you have a question, and that'll be our
that will be the wrap of this segment until you can finish up.
Thank you for calling me, and thank you for allowing me to ask a question. So to kind of go to the point that Greg was asking in terms of the date and January 1st, I absolutely understand the system and that it's based on the first of the year, but we currently use a system where we allow for supplemental property taxes based on transfers of ownership, building permits, and that's based on the date of the incident or the date of the transfer or the date of the building permits. Why wouldn't that be the case here? Why can't we do some sort of a supplemental tax
There- we
bill,
do- we
that
do
would
have
be a
supplement-
reduction based on January 7th, where it's reducing and giving a credit. Why do we have to wait till July 1st?
Well, you're going to, forgive me, I didn't explain the supplemental bill. So this event occurred in the second half of the 24-25 year. So
Right.
we reassess, we will make an adjustment and correct it, and there will be refunds for that portion of the year where the value was reduced.
Got it. So there will be a
Yeah,
supplemental bill reducing.
Right.
Got it. Okay. Thank you for
Exactly.
clarifying that. I
Exactly.
appreciate that.
And so maybe I should have started the bill, and perhaps I should have done that. There will be relief because there is a portion of your year where you already
Yeah.
paid, and that, once we do our valuation, part of that will generate a refund based upon the reassessed value.
Perfect. That makes total sense then. Thank you.
Okay.
And you said there was one other thing you want to touch on for at least the
Yes,
final
yes, I
7
do.
minutes of this segment.
So there is also, perhaps there's going to be some people who decide, well, I don't want to rebuild. I would rather get a replacement property and transfer my old base value to the new property. Well, that's allowed as well. There are 3 programs that allow you to do that. And I wanted to mention those real quick. There is one provision, which is Prop 50, that allows you to transfer your original property's trended base value to a replacement property. And for this one, it's for all real property, which means it doesn't have to be residential. It could be commercial, it could be industrial. So if you lost a commercial property, this would be the option that you would choose to take your trended base value from the original property and put it onto a replacement property. But with the caveat that the replacement property has to be in the same county. So it was in Los Angeles County, it has to be, the replacement must be in Los Angeles County. And there is also, the test for that is also the 120% of full cash value as the test of what you acquired, if it's comparable or not. It's the same test on that provision. Now, there are 2 additional ones that are exclusive to residential property, primary residence. The first one is Prop 171 that allows you to transfer the original base value of your primary residence to a replacement primary residence in any county that has enacted the ordinance for this. So not every county in California has the ordinance for Proposition 171. So you'd want to look into that. And then there's another one, which is Prop 19, and that will allow you to transfer your original base value to anywhere in California. Now, for these 3 propositions allowing you to transfer your trended base value to a replacement property, the damage has to be substantially damaged, which again was, it has to be damaged, lost market value of greater than 50%.
Is there any questions there for at least the final 2-3 minutes of this particular segment based off what you just heard? If you can use the raise your hand feature. Okay, going once, going twice.
I suspect there'll probably be some questions people have an opportunity to digest. Because there's a lot. I will just end with my question is this a complicated process that, with everything going on, that now, an affected homeowner has to deal with, or is it just pretty much cut and dry? And do they need any additional support and help in navigating this?
Well, if you need additional support, you could always come to the assessor's office. We also have 2, if you would like information now, we have 2 resource centers that are out there. One is in Westwood, formerly at the Westside Pavilion. It's located at 10850 West Pico Boulevard. For Altadena properties, there's a disaster recovery center where we have staff that can answer questions and help people to fill out the misfortune and calamity applications. That's at the Recovery Center in Altadena at 540 West Woodbury Road in Altadena. You can also visit the assessor's website at assessor.lacounty.gov. And on there, you can book an appointment with a ownership specialist to answer specific questions about your particular situation. Perhaps you have it in a trust or something of that nature, and the qualifications. You can book an appointment, either virtual or in person, with an ownership specialist by going to our website as well. And at our website, you could also fill out the application for the misfortune and calamity. You can print it out, or you can do it online. There is also two other things I'd like to mention on the website. We have an assessor's letter, which if you put in your email address, you can get up-to-date information about things that are happening. And you can also register your property. If you register your property, you will get updates about the status of your application. It'll be more specific information about your property. So if you go there, it'd be probably in your best interest to sign up for the newsletter and also to register your property.
Great advice. Thank you. Actually, that's probably the best thing I think I've heard from you, that there's help versus someone trying to navigate this process by themselves.
There's
So-
absolutely help. And anytime you invite the assessor, he will come out or send some of us. We'll be at those locations giving help, answering questions, whatever is needed.
Thank you. Thank you so much for your presentation and your time today, sir.
Sure. Wonderful.
Go ahead, Gerard.
All right, thank you so very much, Jerry, and as well, Ian and Ted from the Office of Assessor Jeff Prain. Thank you so very much for joining us. And if there are any questions that weren't being asked, forward those to me, and I will forward that to the team, and they can give you a proper response.
Great.
All
Thank you
right, so
for
thank
having
you
us.
again.
Yeah, our pleasure.
All right.